Well, welcome everyone on this second call this year. So today we're going to talk about Q1 mainly, and I think Adam will give a first impression or first view of what they're seeing in Q2. And this will be the last call before our meeting in June, which I think Frank will tell you more about. So Frank, over to you, and then Adam.
Thanks, Peter. Good afternoon, I guess, for most folks. Good morning for a few, and happy to be on this next version of our, quarterly calls. I'm excited about this one because I'm really interested, Adam, to see the numbers and to get a sense for, how the first quarter played out, and certainly talk a little bit about the second quarter and what's driving, the marketplace. Before I do that, though, let me just mention a couple of quick things. So our next report is due out in May. It's called Distribution Innovation. And what it will cover is basically a lot of what is happening in the marketplace from a technology standpoint and what the distributors are doing to support that and drive services and additional support, activities into the marketplace, both upstream, for the vendor community, and certainly downstream for the solution provider community. So look for that. You'll see a lot of posting. When we release it, it'll be on our website, and it'll be available in the Knowledge Hub. Just quickly, two other quick things. Peter mentioned it. We have our EMEA Summit coming up here, June 13th to 14th. In Amsterdam. We're really looking forward to that. We've got a good agenda planned, and it'll be an excellent networking opportunity. And we've got a lot of folks signing up for that. And then lastly, we will have the date shortly for our North America event. It'll be in February. We're finalizing the details with the hotel as we speak. And so that's coming. So let me go over to Adam quickly, because I'm interested in seeing the numbers and taking a look at what's happened. So Adam, over to you.
Very much, Frank, and thank you very much, Peter, for inviting us to come and speak, and happy King's Day to all of the Dutch who are celebrating that today. So we're going to be doing some online survey of people online today. It's really useful to have the feedback of people at this session. And we've been doing this at all the previous sessions for the last year. And it's a really useful way of seeing what people are thinking and feeling at any particular time. And we do come back to it. So let's just start off with something, taking a bit of a helicopter view of what's going on in the tech sector. So we have done this review since September, in fact, since March 2020. And we've done it approximately every 6 months. We haven't actually done it for just over a year. And we've taken a basket of tech companies in each different area of the technology sector. And we've tracked how their stock market performance has been doing against a benchmark of September 2019. So you can see that from left to right, we've got the lowest relationship of growth to September 2019, with tech retail down 16% on where they were in September 2019. And in fact, they've come down from where they were. December 21 was pretty much the high watermark of valuations. And it was pre-war in Ukraine. And so really there was a bit of a cold shower thrown on the economy and on the whole world outlook. And in fact, the last time that we did this review, June 2022, was pretty much the low point of the stock markets, although not the low point for the tech sector. But tech retail has suffered, and in fact, Best Buy is down, Dixon's are down on where they were the last time we did the measurement. Can I ask people to mute? There seems to be some sort of feedback going on at the moment. Infrastructure, which includes companies such as Nutanix, NetApp, Seagate, IBM, Cisco, HP, companies like that. They're a mixed bag. NetApp is actually up. IBM is a little bit down. Cisco is flat, and HP is a little bit up. On the headsets and webcams, we don't have many people in the basket. We just have 2. And in fact, Logitech is still up, and GN Store Nord, which is Jabra, is in fact down. So it's kind of flat for that area there, but it's only a very small representation. However, of course, it was one of the sectors that really performed exceptionally well. Imaging has managed to hold on to some of its gains. So that's Epson, Brother, Canon have done pretty well in holding on. Personal systems are a bit of a mixed bag. So you can see that companies like AMD are still quite a bit up, and Acer and Lenovo are up, but others are down compared to where they were before. They're still up because you can see that we're still talking about a 60% increase in valuation compared to where we were. GAFAM is interesting because Apple continues to grow and Microsoft continue to grow. The one that's been consistently coming down in the period is Amazon, and Facebook as well came down quite significantly earlier on. But the fact that it's holding up at the moment, the GAFAM valuation against September 2019, is really down to Apple and Microsoft. So where are we on distribution? Let's have a look and see. In fact, distribution is holding on pretty well to the gains, and was the biggest growing and still is the biggest growing compared to its September 2019 valuations. And at the moment, what we got is Esprinet flat, Computer Gross a little bit down, Cinex a bit down, AV up, Alzo a little bit down, and Logicom up. So in that basket that we use for the comparison, you can see nevertheless holding on to a very big gain and relatively the largest gain compared to other sectors. When you look at the stock markets, they came down quite a bit back in June. They're climbing up a bit now. They're still well below the high point of their valuation, which was back in December 21. There are some sectors that are doing pretty well, some luxury sector, so companies in that area have done pretty well recently. So that just gives you a viewpoint, a little bit of a helicopter view of the tech sector. I hope it's interesting for you just to see that. But I think it's encouraging for overall for the sector, but also particularly for distribution. So I thought I'd start off today by talking about some of the characteristics of the channel which we're seeing today. I've come out of 5 forecasting sessions. We've had those in the last couple of weeks. So I've had a lot of exposure to different people, resellers, distributors, vendors, listening to what they're saying about the channel today. And so I'll find out later on when we do our questions whether this echoes with your experience. But let me just share with you some of the words which have come out from in the last few weeks. So at the moment, it's about backlog, not bookings. The bookings are slowing down. The backlog is being what's really driving the growth at the moment in the channel. It's value, not volume. And that is an old story, really, for all of us. And in the value, it's software and value hardware. Software is the biggest driver and had one of its best quarters in Q1 in terms of percentage growth, which we will see in a minute. At the moment, there's still overstocking. We're not really talking about shortages. There are some exceptions which are driving some issues, but they're getting better. But networking is one of the big ones where there's been significant shortages. But there was quite an effort at the end of the quarter to reduce the overstocking, but there's still quite a bit more to go on some areas. Units continue to go down, and we saw that in Q1, and we're going to show you those numbers. And price increases are slowing, Prices have really saved the channel and the industry, because there have been some significant price increases which have been able to be passed on. But those price increases are definitely slowing. At the moment, we see a great deal of uncertainty about the economy, and forecasting is uncertain. And in many ways, we feel that the value of what we're doing to try to forecast and to look at what's going to happen and gaze into that crystal ball becomes more valuable in today's uncertainty than at any other time. And there are some interesting things going on at the moment. So the first one is that the soft measures and the hard measures are not quite in sync. So if you ask people how they're feeling, they say they're feeling pretty bad. But if you look at the hard measures, they're actually not as bad as all that. If you look at something like the stock market, if you look at GDP performance, it's not as bad as all that. You know, we're not going into recession in the UK. We thought we were going into recession, for example. But the soft measures would indicate that people are really feeling, and it's particularly the cost of living, I think, which has been impacting people's sense of, you know, positive feeling. There is a disorientation due to COVID. It impacts all sorts of measurements. And for all of us, we want to go back to 2019. We're going to do that in context. We're going to go back and look at, see what it is that the market looks like compared to 2019. We've done it on some areas. But I mean, one of the questions is, you know, does a 28% growth in PCs, which took place in 2020, what does that look like now? And where are we now? If we just grown gradually each year, would we be in a better place than we are today? So there is a sort of disorientation. And the true impact on IT investment at the moment just simply isn't known. For me, this is the biggest uncertainty of where we are at the moment, is that we just don't quite know how these economic uncertainties are going to impact the IT investment. We're seeing new models of on-premise infrastructure as a service starting to find expression through distribution. So I think this was a really positive thing coming through from the latest forecasting sessions. Distributors signing up contracts on the new offerings being made by vendors, finding ways of resolving the big problem, the elephant in the room of this, which was who has the liability for the asset, finding ways of solving for that problem. So we've started to see expression of that through distribution, and we think that we should see more coming through distribution. And we know that the on-premise IaaS is a big growth area. And the last thing is that we're starting to feel the back to office in certain categories. We had a nice surprise with the consumables numbers this quarter, which did much better than they've done for a long time. And that's both toner and ink cartridges. And that's really pretty much down to the back to office. So with that, this is the graph which I show every time when we do a GTDC presentation, which is a 13-week rolling average looking at the last year or so. And you can see here that it's pretty flat between Q1 2022 and Q1 23. Back in Q1 23, you have Sweden that was flying high, and Poland was doing well. You can see the big reduction has been particularly in Poland, where the activity levels have come down quite a bit. And interestingly, France, which had not been performing very strongly in the first couple of years well, after COVID, has actually started to have a really good year in 2022 and has started 2023 pretty strong, as indeed have Spain. So when we look at the actuals, this is, Frank, what you were asking about. How did we do against the forecast? The forecast central scenario was 0.2% growth in Q1, and the minus 0.1% was excluding telecoms. Those were the two forecasts that we did, so with and without telecoms. And in fact, we came in really close, the closest I think we've ever done, which was at 100 basis points difference. We came in at 0.3%. And minus 0.6. So we did worse without telecoms. And that's a really important measure for the channel, because telecoms are a little bit of, they're very big and they distract from a lot of the core business of what distribution is doing. So that's more how it felt, I think, to distribution. I would like to say that all of the categories were as close as that, but when you see in a minute, you'll see that that wasn't the case. When I asked you back in January what level of growth you saw for the channel in Q1 23, the majority of you said flat. So I think that we were all pretty much aligned that Q1 was going to be a flat quarter, and that was pretty much where we ended up. What happened in the quarter was that we had a strong January, a very poor February, and then the March, actually, there was quite a good activity that recovered the quarter, allowing us to end at this flat performance. And what we actually see is the value accelerating, not to as high as Q3, and volume was declining, and we're going to see that's very much driven by PCs, which had a really, really poor quarter, as did monitors. And so when we gave our central forecast, we were looking at 12% growth at value. So we were beaten on the value side, and we were looking at minus 6% on volume. And so we were, in fact, too optimistic on the volume. And if you look at it from a reseller perspective, you can see that in Q4, and in fact, throughout 2022, small and medium resellers were leading the way in terms of growth. When you look at Q1 23, the corporate resellers actually overtook them for the first time in a long time with 4% growth. So the business channel's doing really well. The consumer channel's suffering quite a bit in Q1. This is a graph which we've been showing for a number of quarters, showing the relationship between units and ASPs and revenues. And so this is what I said in my introductory remarks. You can see units down very significantly. If you take something like notebooks, minus 30%, that number should be pretty familiar to you. You've heard that number coming in also from the people who give the sell-in numbers. Minus 30 was pretty much the number that we heard there as well. But the only categories which we see any increase in units, wireless access points and RAM memory, otherwise all of them dropping. Still some big increases in price, but as I say, we're actually seeing those increases in price declining. So 10% is below, for example, on notebooks, the types of price increases we were seeing in previous quarters. And we certainly in our forecast, we're going to be forecasting a revenue forecast much closer to the unit forecast this time than we were before. We always had quite a big healthy gap between units and revenues before. And so then this is what it looks like in terms of revenues. Those parts of this is just the hardware growth, but those areas where we've seen growth, networking has been one of the big areas, and servers as well have been really, really strong in terms of hardware growth in the last quarter. And this is where you see on a sector by sector basis, we have this top sector. We put all of infrastructure together. Personal systems is mobile and desktop computing. Peripherals is monitors and printers and consumables and other peripherals. And what you can see here is that we were pretty close on the infrastructure. We were way off on personal systems. I don't think anybody anticipated that Q1 would be as negative on the personal systems side of things. So that's minus 8% variance. Peripherals did a bit better. That was consumables was one of the big drivers of that. Software did really well. Services still pretty, not much growth in there. And telecoms did better than we'd anticipated. Here you can see the breakdown in more detail. You can see, for example, here you can see the software and licenses, 18% growth against a forecast of 13, and the services at 0 compared to 1. So when you look at the software and services growth in the top sector at 13%, it's a combination of those two numbers. But the 18% is really, as I say, a very, very strong number indeed. And then if you look at it on a country by country basis, you can see that this is the actuals of Q1 in the purple, with growth in Germany and France and Spain, negative in UK, Italy, Poland, and Nordics. And this was what we forecast. So the two areas we were most off the forecast was Spain, which had an extraordinary performance, very much driven by public sector investment, the elections coming up, and a kind of positive feeling in Spain. Poland, we knew that there was going to be a correction, but we had no idea it was going to be quite as strong as the correction there. We still think that Poland has got good growth potential in 2023. And in the other countries, we were pretty close. Nordics was another one where we missed there because we overestimated, particularly the software and services. You can see this on this is the country breakdown by a top sector. And you can see I've highlighted in red all of those countries where the personal systems were way below what we forecast, pretty much across the board. Spain and France were perhaps the two exceptions that did better, as indeed the rest of Europe. You can see that Germany did very well on infrastructure and software, better than we'd forecast. When we did the German forecast, we had a bit of feedback from some of the German distributors who said they thought we were being a bit pessimistic. Yeah, they were right. In fact, the infrastructure was doing a lot better there. Software had an extraordinary growth in Spain, 26% growth in Q1. Nordics was disappointing. So Nordics has been growing really fast in software and services throughout 22. And although 12% is very good, it's still a bit of a slowdown compared to where they were before. In terms of the vendors, most of the vendors have remained in negative growth in Q1. You can see everything marked in red was negative. There are one or two exceptions. Microsoft grew. You can see the printers did pretty well. AMD grew. So you can see the different ones that actually grew in a challenging time for volume vendors. And the value vendors have grown significantly at average of 20%, 22%. You can see here, very much bunched together, those growth rates of the top ones. So HP 22%, Cisco 21, Microsoft 19, Dell 18, IBM 23. All of them around about that sort of 20 mark. A few exceptions, Lenovo doing really well in its infrastructure business. Some of the security software people like Fortinet as well. And you can see those growth rates there of the vendors. So in terms of our forecast for the full year, so moving on now to what we're thinking going forward, we made a forecast of 2% for the year. I think it's going to soften slightly for the next round of forecasts. But not significantly at the moment. This was the growth that you gave us back in January before you saw our forecast. So you were a bit more optimistic. You were saying 3 to 5% growth. We came out at 2%, so we're a little bit more pessimistic than what this group of people felt. That's why it's really interesting to have your feedback and your input to this, because I think hopefully it's useful for you. It's certainly really helpful to us to hear what you have to say about your outlook. And so this is our revised outlook for Q2, which is not final. And we're going to wait until next week. We've had a terrible start to Q2. It's been really, really low. Now there's Easter as a bit of a factor in that. So we're trying to discount the fact that Easter was there. But we're also hearing about this, the bookings not coming through. And the backlog being the real driver. So we're a little bit cautious at the moment. So this is not the final numbers. This is what these are the actuals, so Q1. This is what we forecast back in January for Q2. This is where we're going for the revised forecast. As I say, not final, so don't hold me to these. Then the final ones will be given out next week. But we're definitely going to bring personal systems down. There's quite a bit of interesting discussion going on at the moment in context between the country view, which is a bit more optimistic, and the category view, which is a bit more pessimistic. Peripherals a bit improved, mainly down to consumables, software and services a little bit improved, and telecoms as well. So the real driver of change in the forecast is the personal systems. That's really what we're seeing at the moment. So I think that the only thing I'm a bit uncertain about is this infrastructure number, if we're going to go with that 9% or if we're going to be a bit more cautious in terms of what we think. So now this is the moment when you have your say. And I hope that you'll enjoy being able to contribute to this. So compared to where you were in January, are you more optimistic, more pessimistic, or unchanged in your outlook? This is all anonymous, by the way. There's no way, I cannot know what anyone voted for on this. So this is completely anonymous. It doesn't surprise me that people are feeling a little bit more pessimistic. But there's quite a lot who are unchanged in their outlook. That's interesting. Okay, let's move on to the next question. What growth do you see in the channel in Q2 2023? So you have a choice of greater than 6%, 3 to 5, 1 to 2, 0, -1. -1 to -2 or -5. Okay, so that's interesting. we have the optimists and the pessimists. We have those who are saying 1 to 2 and those saying -1 to -2, but we have very few saying flat. Yeah, okay, so, but overall, a bit more optimistic than we are. Okay, well, that's encouraging. Let's see what the next question is. Overall, what growth do you see for the channel in 2023? So last time you voted for the 3 to 5%. Will you still vote for the 3 to 5%? Yeah. So it looks like a bit of a reduction, more like the 1 to 2%. Maybe that sort of greater feeling of pessimism, I think, which we saw in the first question, but not significant. I mean, we're not talking big time. Okay. Is the B2B order backlog growing, static, or decreasing? We asked you this question last time. So that's the picture that we've been getting very clearly, is that the bookings are not filling up the backlog. So it's definitely decreasing at the moment. We had huge backlogs during the crisis, backlogs people had never seen or dreamt of before. Okay, so which factor is most impacting B2B activity in volume categories? So what is it that's, by the way, I've only put the negative side of things on volume because things are going down. So I just like to know what is it that's actually impacting. This one, by the way, is one that you can vote for multiple ones. It's not a multiple choice one. And so this is a true ranking whereby every different question has got a vote against it and a placement against it. So, okay, so reduction of company spending. Yeah, so it's basically demand, which is driving the difference in volume categories, that there's just lower spending taking place at the moment on volume. And not lack of innovative product. I just wonder if there was some real kind of game changers in the products, if that wouldn't help. But I think at the moment that's not the case. Okay. Right. What is most positively impacting B2B activities? Is it the private sector or government funded projects? Yeah. Of course, it depends which country you're in, but I mean, there are some huge budgets for government funding which are taking place. But yeah, that doesn't surprise me to see it very overwhelmingly. I think people are saying that it's government which is really sustaining the B2B activity. We're seeing that in Spain and Italy. It's happening even in Poland without the EU funds. It happened in the UK. There's a huge potential in Germany. So that's interesting. Now this one, I'm really interested to know how you rank things. We've never asked this question before, or not quite in this way, but be really interested if you could vote for which type of project is growing the fastest currently. So we have these on-premise consumption models for IaaS where we're beginning to see activity. It's still very small through distribution relatively to the overall infrastructure business. We've seen a huge investment in networking taking place. It's the most fast-growing part of the business. We know that cybersecurity is a really strong driver of growth. The hybrid workspaces potentially a little bit disappointing, maybe. We're not quite seeing some of that growth come through from the hybrid workspaces. Let me just move this up a bit. Public consumption models. So that's things like Azure, hybrid workspaces, ESG. ESG could be one of the big causes of projects going forward. It all depends on regulation. And that is, okay, so cybersecurity comes out number 1. Hybrid infrastructure models number 2. On-premise investment in networking, number 3. And then, now that is interesting that the on-premise consumption models for IaaS is coming out so strongly there. That is interesting. Okay, so I'm getting near to the end of this. What negative factor is most impacting B2B activity in value categories? So I'm really interested to hear what people say about this. Prices, economic uncertainty. You know, we heard about the problem with people being available for training, trained people and resellers. We also heard a few anecdotes about projects being held because customers had downsized and okay, so it's very much economic uncertainty and the delay in starting projects. Yeah, that gets your number 1 ranking very clearly. Yeah, I mean, that doesn't surprise me. So yes, that really brings to a close, unless you have any questions or observations or whatever, and I'll hand back to Peter.
Okay, once again, many thanks, Adam. I think this was, well, at least gave a lot of insights. And interesting to see that you've been so close to the forecast, or that we've been so close to the forecast, which means that you either got better at it, or we were lucky this time. We'll know in a quarter if we're
Yeah.
but really congratulations to being that close.
Thank you. No, we were very close. I think it's there's a little bit of you know, there's overs and unders. You know, there's overs and unders. I think that, you know, we were cautious, more cautious on software and value, which did really well, and the mobile computing did not do well. But I think directionally, it's important for people to know. The question is the industry growing or not? That's the question. At the moment, it's you know, if you take out the telecoms, it was in negative situation in the first quarter.
But if you take out retail and look at B2B, then it's clearly up. I think B2B is up.
The B2B is definitely up. The B2B is definitely up. If you take out the consumer channels, then obviously it's down. But so that's encouraging. There's a lot of activity out there, but I think a slowing activity at the moment. And there is this uncertainty. We don't know quite the way that the year is going to play out, you know.
Hey, Adam,
At the moment.
when you look at I know we're going to project out a little bit, but when you look at the second half, particularly in the volume space, are you starting to hear anything about you know, that getting better based on a few things like the Microsoft you know, refresh that clearly, you know, is coming? Second thing I'm hearing is that there are a lot of companies that are sort of delaying, you know, bleeding the assets a little bit, and they think that might mitigate a bit in the second half. Again, this is kind of on the laptop, PC, you know, endpoint solutions kind of a space. Just as an FYI for everybody, we looked at the North America numbers, similar numbers last week, very, very similar numbers. Laptops were down 33%, desktops were down 30%, servers were actually down, which is a difference here. But we also got some encouraging feedback that they felt the second half was going to be better. Are you hearing the same thing, or is that still a little bit too early to kind of talk about?
I think that definitely we think that there's that refresh opportunity that's going to take place from Q4 2023 through into 2024. So I think there's two things really. There's the Windows 11, but there's also the fact that all those PCs were put out into the market in 2020, so they're coming up for refresh. So I think that there's definitely that. Year on year are a bit deceptive, but of course the year on year, when you get into Q4 and Q1 next year, because we're also forecasting Q1 2024, we'll be doing that in the next forecast. Obviously the volume business gets a big leg up from having such a decline in late 23 and 24. In terms of the economy, I think that we're a bit more gloomy here than the US. I think there's more uncertainty. That's my feeling. I don't know what anyone else feels, but I think that there's just a little bit more uncertainty about the way that the economy is going to play out in there's this mismatch between how people are feeling and the hard data. So yeah, I think that's a factor for us here.
One other question relative to that. We've talked in the past a lot about the fact that the pandemic years have really impacted, you know, the numbers in a number of different ways. If you went back to, so this was a bad quarter, relatively speaking, for, you know, the volume products. But if you went back and looked at the numbers compared to 2019, for example, you know, and you took out 2020 and 2021 because first quarter of 2021 was actually pretty positive because most people viewed that as kind of the end of the pandemic, right? What
Yeah.
are you seeing there?
So we're at a moment, a cusp moment with laptops, because at the moment we're kind of looking at, well, with all of this negative growth, we're actually, and don't forget, we're looking at revenues at -20, but units at -30. So if you look at it on a unit basis, I think that we're at a cusp now, which is, are we really better off? Yes, we're better off because there's more that went out earlier. Therefore, there's a bigger refresh opportunity. But overall, the market is declining. So I think that, that's the issue for PCs and definitely for desktops as well, which have been declining since 2019, which was the last big year with the Windows 10 upgrade. But on some categories, we're way above where we were. I mean, we had a presentation on Wednesday about headsets, and headsets are growing by 5%. But if you look at them compared to where they were in 2019, I mean, we're like 50 or 60% above where we were. So there are some categories which have really, really benefited from the crisis, and some where we're just, beginning to see that it's pretty flat.
Yeah, once again, thank you, Adam, and thank you all for joining. The next opportunity to hear Adam speaking will be at our summit in Noordwijk in, what is it, 6-7 weeks away now. So Context will do a session there. So if you're there, come and see Adam and see us. Well, wish you all a good day and speak to you soon, and hopefully see you in June.